There are different forms and different types of liquidity, okay? But then liquidity simply means money. But then liquidity presents itself to the chart in different ways. So there are different forms of liquidity on the chart. We have structural liquidity that includes the internal structural liquidity and the external structural liquidity, as well as the BSL, your buy side liquidity, and your SSL, your sell side liquidity, and your IROL or ISL, internal range liquidity. Okay, and your external range ERL, as people like to call it, any of those things. Okay, but those ones are structural liquidity. Okay, those liquidities that are presented through structure, okay, by the formations of old highs or old lows or higher highs and higher lows or fair value gaps and so have you. Okay, those are internal range liquidity. Okay, so and then we have session liquidity. Okay, I use Asian session Q zone. I think that's the name of this indicator that marks out my Asian range for me on the chart, in case you want to get it. Okay, so this is the Asian session Q zone. I'll just flash that through. So when you're watching the video, you can see the setup. For those of you in Nigeria, Asian session 1800 to 100, Asia deviation, set deviation to 2. And then I have my max time frame for 60 minutes. Then you can turn every other thing off. Okay, it's only the Asian range that is on. All of those other things are off. Okay, so it helps you mark out the Asian range. Okay, what happened within Asia. Now, this is how price works when it comes to pairs that are not Asian pairs, or in price in general. Okay, this is how we perceive price to reacting to the Asian session. You'll always see a build-up happen inside of the Asian session. People like to teach and call the Asian session consolidation, which is wrong. Okay, it is a very wrong logic and a very wrong approach to wanting to understand price if we limit the Asian session to consolidation. So when you watch lots of other videos, they'll talk about the Asian session as a consolidating session, right? So let's say this is Asia. They talk about Asia as a session of consolidation. I'm hearing too many voices on my background. I'm hearing too many voices on my background. I'll kick you out of the meeting. You watch the video whenever it is posted. Okay, so so many people like to consider the Asian session as consolidation. Okay, that's what they explain in lots of YouTube videos, and then they tell you price will come later to clear the highs because of the consolidations, and then come back to clear the lows because of the liquidity, equal highs and equal lows. That's a wrong logic. Okay, because if we're using this logic to assume that Asian range is basically for consolidations, and then we call it consolidation, this is not by any means a consolidation. This is a clear downward move. Okay, and so is this. This is a clear structural downward move. Okay, let's look for, this is also a clear representation of lower highs and lower lows, clear downward moves as well. Okay, this is a clear upward move inside of here. Okay, and then this is a heavy downward move to the downside. So these are not consolidations. Okay, so it will be wrong if we want to talk about the Asian range and then we limit Asia to consolidation. So people say they don't trade in Asia because Asia just consolidates. It's a wrong mindset. Asia do not just consolidate. Okay, there was a time where for some fundamental reasons, you will hardly see heavy moves during Asia. Yes, but then it does not mean Asia is consolidation. Okay, but then what happens in Asia? I will give you the logic behind the whole session thing. Now, I hope you understand how we get our London, New York, Frankfurt, Tokyo, the rest of those other things, okay? The basic sessions are the Tokyo session or the Asia session, the London and the New York. All right, I want to believe I had thought, okay, for the benefit of some of you guys who are not here, I'll just go through that again. Now, the market, the stock exchange market operates like any other market. The stock exchange market operates like any other market. Okay, if I go to the market, let's say I want to eat yam porridge this night. Yam porridge and vegetable sauce with smoked fish. And then, what's the time? I go downstairs now, and then I get the car, and then I'm going to the market to look for where to buy yam and get vegetables, and then I want to get tomatoes, and then I'll get onion, and then I'll get all of those other things that we use to prepare yam porridge or vegetable sauce or any of those things. What is the possibility that I will see those things this night in the market? What is the possibility that anybody will be in the market by this time of the night?
It's not impossible.
Very slim, right?
Yeah.
Or even almost impossible. You have a community market. Okay. Some of you have central markets in your village, and you have market days. True or false?
That's true.
Good. Now, there are some markets that there are some kind of things that you want to buy, or your mom will want to buy, and she will not just go to the market on any day. She has to go on a specific market day. Or go. Now, it's like when I used to go to town to buy fresh fish. There's a specific time I must get to town, because that is when the fishermen will just arrive at the dock, and then will begin to sell to the women, so I can get at a cheaper price. Okay. So the same thing is applicable to the stock exchange markets. Okay. There is an opening time. The Nigerian business time is 8 a.m. to 6 p.m., right? Except it's for nightlife business or the nightlife enthusiasts. Okay. 8 a.m. to, if it's not a club, if it's not, in fact, even eateries and restaurants close by 9 p.m. in Nigeria. So the whole market frame is from 8 a.m. okay, to 9 p.m. True or true? The same thing happens with the stock exchange markets. So when we say we are trading London, we are saying that the London Stock Exchange market, the same way you wake up in the morning and go to your office to do your business at 8, we are saying that the London Stock Exchange market has opened and they are doing businesses already. They are buying and selling at 8. And they continue with their activities throughout the whole day till 9 p.m. Okay, so inside of London, there's a place where London and New York now comes together. So London has been going on, and then there's a London break that now introduces New York, and then London is still on, because London will run till the end of the day. The same thing with New York. But then we assume that London, everything about London should be done at 4 p.m. and then New York carries on till 9 p.m. and then Asia continues from 9 p.m. till 5:30 or 6 the next day. Okay, why is it called Asian session? The Asian stock exchange market, because of their time difference. Okay, it is all because of their time difference. This is when they are open for business. So if I'm trading Euro USD, that is not an Asian pair. Okay, all of those are London pairs. It means I should see the best of price volume during the time that these guys are willing to do business. Does that make sense?
Yes, sir.
Good. So we have the most of the entries. We have the most beautiful of price actions play out during London and New York. Okay. Now, when London, you always see me say liquidity is full. Okay. What is liquidity? Liquidity just refers to orders. Orders, the only way orders can get on the charts, liquidity just refers to money, rather. The only way money can get on the chart is through orders. By orders, I'm referring to your buy limits, your sell limits, your instant execution, your stop losses, and all of those other things. Okay, those are what we call orders. Okay, and then that is how liquidity finds its way to the chart. So it means that if I own this chart as London, I own this market as London, right? And then I am not online to deal at a particular time, let's say from the hours of 9 p.m. to the hours of 12 a.m. or 3 a.m. Okay, and then retailers are just pushing the price. The big boys are off. And retailers, except there are some fundamentals for that particular time, retailers are just pushing the price and trying their best to push price up and down and all of those things. By so doing, introducing orders into the market as sell, as buy, as sell. Okay, it means all of those points, I have retail orders inside of those area when I was not active. Okay, the guys who were actually in the market at the time I was not in the market. Okay, because my open time is from 8 a.m. to 9 p.m. Okay, does that make sense? I'm trying to take you guys somewhere, okay? And then you must understand that if you must trade liquidity, you must understand logic. The idea is to be able to think like them. Okay, so liquidity is useless without logic. Logic is what gives meaning to liquidity. Okay, so the idea is that when I get back on the charts, I should be interested in clearing the orders that were created in my absence. The orders that were created in my absence. Okay, so I just need to go there, run through their liquidity, and then do what I want to do, right? And then run through the liquidity, continue if I want to do this. Okay, so this is a new day, and then a new high was created, right? I let them play, and then in the morning, what do? I run through their liquidity, right? And then I continue, I also run through this liquidity. Okay, so let's look for another day. Asia, the big boys are out of the market. They are doing their thing. They come in and then they run through the liquidity. Okay, grab all of those positions they are open before now and then continue to run through the liquidity. Okay, another day, Asia. Let's see what happened. Okay, so Asian highs, Asian lows, right? So what did they do? They run through the liquidity, continue, run through the liquidity, both highs and lows, and then continue their business. Okay, so both Asian highs and lows are seen as session liquidity. Both Asian highs and lows are seen as session liquidities. So the question should be, every time I come online, that is why I do not do weekend markup, or I do not do, what's it called? You will not see me send you my expectation for the next week on a Friday, or what are we, price review for the next week. This is what I expect. I may have a higher time frame overview of what I expect price to do the whole of the week. Like I gave you guys on Euro USD last week, right? Last Sunday, guys, I told you guys this was going to happen within the call, and told you guys why Euro USD would not go, why EU would not go below that area, because it was only interested in grabbing liquidity from one failed demand or one area that was supposed to be a main inducement. Let me see if I can get that again on this chart. Yeah. Okay. So I told you guys the idea was just to grab liquidity from this guy. Okay. That will bet some minor upward movements and they will continue upwards for a while before coming back down again to mitigate these areas. Okay. So as soon as they did that, I was willing to, as soon as I saw a grab on liquidity, I was willing to trade my buys throughout the whole of last week and then just look for tangible positions, knowing that the overall direction will be an uptrend. Okay, so the question would be, how do I understand this session liquidity and use it in my favor? So the first thing I do when I come online, the Asian range indicator already marks this out for me, so I don't have a reason to begin to mark out the Asian range. I wait for either the Asian highs or the Asian lows to be taken out. If the Asian low is taken out, I wait for a break of structure. Okay, so price came here, did this, and then came to grab Asian low, right? At this point, our Asian low was taken out. Once the Asian low is taken out, I wait for a continuing break of structure, which is this. But on this particular trade at the beginning of the week, I was in this trade from this point. I remember this trade very well. Okay, for some reason I was in this trade. Okay, from here, yeah, I was in this trade from this point. This was what I considered as my break of structure on Monday, last Monday. So this was my break, and then I entered from here. And I explained this entry too on the call we had last. Okay, but then this is what you should do. You wait for the break of structure after the Asian lows or Asian highs have been taken, and then mark the next target liquidity that should be raided. Okay, mark the target liquidity that should be raided. Target inducement rather, that should be liquidated. Okay, and then once that happens, liquidated, right, you wait for another break of structure. So this is your internal break of structure and your external break of structure in this range. Okay, for confirmation. And then you're willing to engage. I also explained this trade to you guys why I took this trade. It was still the same reason why I took this trade. You're willing to engage from here. Okay, so price came, tapped right in, right? And remember, I was on this move, tagged and then moved. So this was the first trade we have on Monday. The whole concept and the logic behind this trade was simply following Asian session liquidity. Okay, so I mentioned that the London session opens at 8 a.m., right? So it means that if I want to trade London, I should be on my chart by 7 to mark the story that had happened pre-London, okay? And then to build a base around what I'm expecting to happen in London. So by 7 o'clock, this is 7. Let me look for 7 on these charts. All right, this high here was formed at 7 o'clock, 6:08 UTC, 7 a.m. Nigerian time. Okay, so this was formed by 7 o'clock. So at this time already, I am already looking for the next point of anything else that should happen, okay? Because I have a structural point that has shifted, right? And then I want to see what price would do from that point. I don't trade Frankfurt open liquidation. I like to wait for 8 p.m. Okay, so I don't trade 8 p.m. liquidations, 8 a.m. rather, sorry. I don't trade 7 a.m. Mitigations. I like to wait for 8 a.m. mitigations because 7 a.m. is just Frankfurt open. Okay, later I'll teach you guys something ICT calls the Judas swing, accumulation, manipulation, and distribution. Okay, but then that's a topic for another day. So I'm more concerned about my 8 a.m. mitigation, which should be my 7 a.m. UTC. And then that was why I was willing to take this trade at this point because it was already 7:30 at the dot. Okay, so this was my 7 a.m. mitigation. This here was my 7 a.m. mitigation. What price did with this was to come to grab liquidity from this low. When I saw that we grabbed liquidity from this low and rejected above this high, okay, I just needed to see a shift in structure that took me above this high to confirm that we are willing to deal. Okay, that is why I did not enter the trade at this point or at this point or at this point. I needed to see my shift in structure. So once this guy cleared these both highs, I just targeted the next area of my inducible wick for liquidity to be raided, and then price came in, tapped nicely, and then moved. So this was my 8 a.m. mitigation. So you can choose to just trade London Open and still be very much profitable. Okay, choose to trade London Open with the story that was present already inside of Asia. Okay, why did price not come immediately to clear this thing, this high? Why did price not come immediately to clear this high? Anybody knows why? Are you guys following at all, or you are lost? I hope nobody's lost. Is everybody following?
Yes, sir. Yeah.
I don't understand why it's exactly. I'm following.
Okay. Now, if you
So
look
I
at this,
think
yeah.
it wanted to engineer liquidity while going up there, not just
Okay, yeah. Part of the reason is to engineer liquidity because that's what price does basically. Okay, everything you see price do is to engineer liquidity that will induce you before they come back in to liquidate you. Okay, but then there is an amazing structure inside of here that is a smart money footprint that cannot be just ignored. Okay, so this is a nice smart money footprint. We have this grab on liquidity here, okay, and then price broke structure at this point. Okay, never returned into that area and just continued to move down, okay, and tank through the whole of Asia. Okay, so it means that they had reasons to come back into this area. They had reasons to come back into this area. At least mitigate this last point of buy before this sell. This was the origin of this buy, right? Before this sell. And then if I want to take it further, I can now begin to get my what's it called? My break flip zones rather inside of here. Why should I look for flip zones? The only reason I should look for flip zones on a trade is if there was a grab on liquidity of the low, is if the low or the highs grab liquidity and then gave me something that looks like a buy setup. So this was a nice buy setup because of the trend that followed before it. The trend that followed before it was bullish, right? You can see this here. There was a bullish story before that. And then price came nicely and grabbed liquidity from this low, right? First grab on liquidity, moved, shifted, failed. This was also a grab on liquidity, came here, tapped nicely, grabbed liquidity clearly from this low, and then continued to break internal structure. After this structure was broken, we were supposed to see some sort of return to optimum trade entry, okay? That would now birth new buys, but that failed to happen. The moment that failed to happen, it means that there should be some sort of flip zones because this was supposed to be where the new buys would come from, and that failed to happen. So it means that for some reasons, there should be some sort of flip zones inside of this reaction that was bettered here, okay? That price should be interested in, okay, in the future dates. Now, the reason why it did not weak this and just begin to drop, it had to go above it. Anybody knows why? It did not just tap and drop. It had to go above this high. Does anybody know why it did that? Look at it, look at it, look at it very well. Look at it. Look at the zones. Let me zoom in on my screen so you see it. Why did you think price cleared that high before going down?
There's
But I
an
think you just
imbalance.
forgot liquidity.
It's an
there.
unsupported base.
Unsupported base. It's not an unsupported base.
I'm
It
saying
is
because
the-
of the imbalance.
it
There's an
is a-
imbalance above it.
Okay, I will clarify that. It is a very supported base because it was working with this block. This is a very valid block. Okay, so it was actually trying to react off this block. Okay, now I told you guys something. When you mark out your inducement highs, okay, that would bet your entry. When you mark inducement highs that will bet your entry, your inducement high should be the last week on your entry time frame before the fair value gap or inefficiency. This is my fair value gap and inefficiency that was around my point of interest. Where is my point of interest? I am looking for a flip zone. Where should be the flip zone? The flip zone should be the guy that stubbornly violated the previous area of demand. Okay, so it means that my area I'm looking for needs to be around this region. I cannot begin to mark here. This is not the guy that did the work. This is a reaction. This is the guy that reacted to this place. Okay, and then why he reacted, it did not necessarily grab liquidity. So it means it should be liquidated itself. Okay, so I will now mark the week of this as my inducible high. Okay, that high there was an inducement that would now become liquidity for the market makers. Okay, so Yola, do you understand that?
Yes, sir.
Now,
Please, could you explain that again?
okay. Now, this is a flip zone. If you trade flip zones, you are looking for the idiots that caused the failure. Okay, because like I will always say, supply and demand are not areas of sales or buys. They are areas of negotiation by the big boys. The composite man is trying to do business. So at that point, the composite man is negotiating. The composite man is trying to get a fair deal. He's trying to, you understand all of those things, all of those transactions are going on inside of there. And then they are trying to make a decision. And at the end of the day, they decide, okay, let's dump. Let's mess this up. A lot of guys are coming here for buys. Let's mess this up. Let's continue with the initial story. Already we had a grab on liquidity above this to justify our further down move. Okay. I think I'm about to kick somebody out now. I'm about to kick somebody. Let me know that. Okay. Remove and remove. Good. Okay, so Ngozi is out. She will join the 4th Zoom meeting after this one. Until then, she'll just keep watching videos. Okay, so what was I saying before she distracted me? They have a reason, justifiable reason to sell from this point because they grab liquidity already from this high, right? And then they have shifted below internal structures. So it's justifiable for them to be willing to sell. Okay, but before they did that, they had created a buy narrative inside of this point. The moment they grabbed liquidity and they broke this structure. So price was now supposed to follow the preceding trend, come into this point, tap buyers, and then move. Okay, but once that fails to happen, that is why before you enter a trade, you must always look for some sort of LTF confirmations. Okay, there should be a confirmation so you don't get caught up in the noise. Okay, we are humans. Most times we get scared. FOMO comes in. We are afraid we don't want to lose out on the trade and all of that. And then we just go in aggressively and then we get burned. But then we should not trade like that. We should always ensure that we see basic confirmations to the setups we'll be trading before we are willing to engage. Am I making sense? Okay, so this high, this move here was a reaction from this guy that was supposed to be the new demand level, where smart money traders and SMC traders are now looking to buy from. Have I been talking for 30 minutes already? Okay. Where smart money traders are now looking to buy from. SMC traders are looking to buy from without asking valid questions. Okay. They are only trading patterns. Once your SMC trading is now restricted to patterns, I want to see this is an SMC setup. It has done this, that. You are as good as being a basic retail trader. That's why I said SMC is useless without logic. What makes SMC smart money is your ability to be able to think like these guys who we call market makers, or think like the banks, or think like the algorithm that moves price. Okay, so at this point, price is inside my zone, my point of interest, but I'm not buying yet. I'm not interested in buying until I see a shift in structure. And God so kind, that shift did not come. It automatically means that this area becomes a flip zone. Now, I now begin to look at the behavior of price inside of this. Let me clear this shaded area. Now, look at this guy. This was the guy that bettered the reaction. Look at this candle, came here, right? The first tap. The first tap was this candle, right? So it means this is the high. So it means this is the high, right? And this is the low. If this is the high and this is the low, if there is some sort of grab on liquidity, it should look like this, at least above this, and then pierce into my fair value gap to grab liquidity before giving me something I can be willing to play with. Or if it grabbed liquidity from that point and continued below, when I come back to this zone to sell, I would not sell above this high because this high has already grabbed liquidity. I will look for a new inducement wick inside of this high that becomes my point of interest. But until that happens, it means this is just another inducement to make people feel that this block is now the flip zone, or like they call it, institutional funded candle. And then they mark out this block to buy from, to sell from rather. And then they want to choose this as the inducement week. And then they get bonds. And then they come to Instagram to say other blocks do not work anymore. Smart money is becoming the new retail. All this smart money, the blah, 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 rubbish. All of those rubbish, okay? It's because they don't know what they're. When a person is foolish, a person looks for reasons to justify. That's how foolishness works. I've been foolish a few times, okay? When you're foolish, you look for the reasons to justify your foolishness. That's what makes you feel comfortable. And the idea of that thing, the human mind is such a very, very funny place. The idea of that is to make you comfortable in your stupidity and give you a reason that this is the best option. Just, it's not your fault. After all, you mark the demand block. Price just came and manipulated. The manipulation on Euro USD these days are just too much. Other block does not work anymore. So when you go online, you look for people that post other block does not work anymore. So you comment, it's true. Me self, the one I marked last time did not work. You understand? So that's how it works. That's how it works. That's why I said, I want you guys to be logical, okay? Think like, apply logic when you trade, okay? What is the bulk of traders doing? If every SMC trader in the world can easily spot this buy, Dr. Banks will cycle that buy and call it an inducement and wait for price to come back to that point and manipulate the area. Okay, give me something I know I've rinsed them off, then I'll be willing to come in, maybe something around this area, then I'll ride from there. Okay, but then if everybody can see it, then it's an inducement. The composite man does not like you that much to give you money. The idea is not to give you money, so take money from you. Okay, so this guy did not do its work. It did not tap into any form of liquidity. It was just by itself, enjoying itself and all of that. Okay, so I expected that to be induced. Though I did not engage from this point because I wanted a shift in structure. Okay, market has opened. Happy new trading week, everybody. All right, so where was I again? Where was I again on the story? No, it's actually very sweet when you understand what price is doing and then you can actually explain what is happening on price. Okay, so the total movement of price is to grab internal liquidity and deliver it to external liquidity, and grab external liquidity and deliver it to internal liquidity. Grab buy side, deliver to sell side. Grab sell side, deliver to buy side. Grab buy side. That's the only thing price will keep doing if Christ tarries. Okay, so as soon as they did this, they were not willing to play at that price anymore because they have gotten what they wanted. The idea was that too many guys were already here who would come in on these inducements, because this is also an inducement to make you feel like they are willing to buy. Okay, and then you will now call this here a internal shift in structure, right? You call this here a shift in internal structure if you're trading the 30 seconds. Okay, and then you will now call this your order block, where you're expecting your confirmation entry to come from. Okay, so you'll be expecting price to now come, as price has broken below this, you will now expect this to happen. When that failed to happen, you will not call this guy here a flip zone. When this high has been raised, you will not call this guy a flip zone and expect that this guy will now become where you will now buy from. Okay, because they said this is the last point of demand that failed supply. So it means if price is coming back. So first of all, you try to trade this, break of structure, come here and dump, and it failed, right? So secondly, you will now try to trade this, okay, the flip zone that comes on the failure. You try to trade this and it will now still fail. You will not say you are done for the day. Price is not clear.
Boss,
you will not
I
post,
swear I've experienced it.
you will not post price is not clear today. EU is just doing anyhow.
I swear I've
Market
experienced
makers
it.
are just manipulating price today. It's you that is manipulating yourself. You are your manipulation. Okay, so you must be able to think like the rest of them. If you are seeing a setup, no, it will come to a point where somebody told me something. He said, when you get to that point where trading becomes boring because you're doing the same thing over and on, then you are beginning to understand trading. Trading is not fun. Trading is a very boring game. If trading is still fun, then it means you're still trying to get a grip on it. Okay, because it is just, you just keep doing the same thing over and on, keep doing the same. There's nothing extra, there's nothing happening more, there's nothing. Okay, now until price taps into my inducement level, my IDM levels, there's somebody on the back end, your network is disturbing me. Okay, please, I will just say mute. I'm now feeling bad for what's she called, for Ngozi. And you know I'm not a wicked person. You guys want to make me like that. I don't want too many noise on the recording, so it's all right. So if price does not tap my inducement level before giving me a reaction, I make sure that before I enter that trade, let the main point of demand fail. It is when the main point of demand have failed, I have a clear shift in structure. price did not tap my inducement, but it's giving me a story. I would not enter on the internal structure. I will enter on the external structure. Let the internal structure fail. Then I'll be willing to work with what price is saying. Okay, so if this was the moment, I would have not taken this trade until price has grabbed this liquidity. So when price grabbed liquidity, if not, if that did not happen and this just began to run, I would not trade until price filled this zone. When price filled this zone, I will now mark out what I expect to be my flip zone. Okay, and then look for the story that happened inside of the flip zone to now work from there. Okay, but until then, let's just continue with what I have less than a minute. Okay, I'm sending a new link to the group right now. Okay, guys, I will end this meeting here and send a new one to the group so we can just continue. I would not like to get cut short while I'm explaining.